Hi, and welcome to the next edition of Danny Brown Talks Phoenix. I'm Danny Brown, your host, and today I'm joined by Garrett Sirkvedik. He is a lender with JFQ Mortgage, and today we're going to give you kind of an update on what's taking place in the Phoenix real estate market. Garrett, welcome to the show. Why don't you tell us a little bit about yourself?
Currently work for JFQ Lending. We are a small brokerage based out of Scottsdale up north. We do both refinance purchase. We work with about 5 to 7 different lenders at a time and have a wide range of products and pricing and options for both buyers and for refinancing. So I've been in the industry since 2006, been doing it a while, and moved all over the place. Started off with some of the larger retail banks, and recently just went back into the broker world. And so just here to do this market in a minute thing.
Great. Well, every month Garrett's going to be joining us, and we're going to talk about what's happening and what's taking place in the Phoenix real estate market. So what I'm seeing with our clients is it's very much a seller's market right now. Typically, we're coming right out of the spring months, where the spring, basically January through about June, it's very busy. So you see a lot of people selling, a lot of buyers in the marketplace traditionally, and what we're actually seeing right now is a drastic shortage and lack of supply. So there's not as many sellers right now, and the buyer activity and the buyer demand is, right where it should be. It's on pace and the same as it is every year. So the demand's not any higher for homes. There's just not a lot for them to choose from. So that is causing home values to increase. Conversely, at the same time, we're seeing mortgage rates increase as well.
We are.
So where are mortgage rates at today?
Well, as a lot of people probably saw, the Fed just increased rates again last Wednesday. And so it brought the federal fund rate up from 1.7% to 2%. And what that means basically is that it's costing banks more to borrow money and to then lend it out for mortgages, credit cards, personal loans, things like that. So with mortgages, we are starting to see them, climb, and they've been climbing since last year. I think the low point last year was September, and we've seen a steady increase since then. Typical rates for a well-qualified buyer, and well-qualified typically means 740 credit or higher. 20 to 25% equity, larger loan amounts, no cash out if you're doing a refinance. On a conventional loan, you're going to see rates in the high fours, without buying it down and paying what are called points.
So the high fours is best case scenario.
Yeah, well, you can get lower than that, but you're going to have to invest some additional money in cost. You're going to have to pay points, and points are tax deductible. You're basically paying upfront interest to save interest over the life of the loan. And a point is 1% of your loan amount. So on a $200,000 loan, a point costs you $2,000. So it's not that the rates in the low fours and high threes don't exist. They're just expensive.
Sure.
And they're really expensive if you're not well qualified. To give you an idea, let's say a person with perfect credit on a $200,000 loan qualifies for a 4.75. That person with a 680 credit score would be at something like a 5.25. And if that same person with a 680 is pulling cash out, they're going to get somewhere close to 6%. So rates really are starting to increase, and unfortunately that increases your payment and decreases your buying power if you are buying a new home.
Yeah. So what I'm also seeing is that affordability is really being impacted right now. Mm-hmm. So home values are going up, interest rates are going up, so people's monthly payments are getting higher, and their buying power is going down. Mm-hmm. So I read a statistic that the value of homes, the price per square foot in Phoenix is up over 9% from this time last year, wow, which is 4 times the inflation rate. So as wages are stagnant, people are being able to afford less and less. So our advice is that if you're on the fence and you're a buyer, get in the marketplace and take action. If the home that you're in right now isn't the home that you're going to be in for the next 5+ years, it might be a good idea to consider selling that, because it's a really great atmosphere to be a seller. And there's a lot of cool stuff that my team and I can do to assist if you're going to sell in order to buy.
Absolutely.
Some creative ways to kind of alleviate some of that stress. And what we're telling all of our buyers is that, be diligent. persevere. It's really tough. Don't get married to any particular property because odds are you're going to be facing multiple offers, and you might get outbid multiple times on different properties. And, keep after it because you will eventually get a property. And once you do get that property, then you're in the position where you're getting to take advantage of those rising home values. And you're now a property owner taking advantage of this real estate market. Let's talk a little bit about what JFQ can do for buyers in this marketplace to help differentiate them from other buyers.
So a couple of things, on the finance side, there's only a few different things that we can do to really have our buyers stand out. One is we really try to highlight the, what the buyer is bringing to the table, that may be better than, somebody else they're competing with. So we like to write a letter to the listing agent and the seller, going over, anything. It could be, this buyer has a lot of liquid assets, so they don't have to worry about the down payment, because one big thing that comes up in process is sourcing funds for a down payment. It's probably one of the most common issues that pops up. This buyer is, their debt to income ratio is very, very low. So, they're not going to have issues qualifying at the end if things were tight. This is a conventional borrower versus an FHA, which typically requires higher credit scores and, larger down payments. So, we try to really highlight those types of things, for a seller and a listing agent that may steer them towards their offer versus another one that's equal.
That's super interesting. As a listing agent, I have never received a letter from a buyer's lender addressing the quality of their client. I think that's a really great way to help differentiate your clients from the buyer competition that's out there. I'm a big proponent of those personal letters. I advise all of our buyer clients to write them, no matter the situation, to the sellers on the other side, because it can mean the difference between them getting the property or not. It can really mean the difference of tens of thousands of dollars in terms of the purchase price and your ability to negotiate. So those letters go a really long way. That's basically kind of where we're at in the real estate market for Phoenix. Property values are going up. It's a fantastic time to be a seller. It's a little bit tougher right now to be a buyer, but there are still homes out there that people can buy. And if you are trying to buy, just persevere, be diligent, and you soon will get to take advantage of these rising prices.
Definitely.
Thanks a lot, guys. Tune into our next episode. Appreciate Garrett for coming in and giving us this market update.
Absolutely. Thanks for having me.